Hi, this is Mark with your analysis for the week commencing the 21st of July. Before we go into this week's analysis, let's take a look back at last week. And I also want to cover the subject of tiptoeing around the news. One of the members in the forum was asking, how do you do it? And I will show you how we treated a trade on the euro pound this week. Last week on the euro USD, I was saying on the longer time frames, I was hoping for a move to 12800 or 133, and we didn't get either. But what I did point out was a potential pullback to 130 because of the fact, obviously, it was major previous and resistance and support. It was messy last week. We then went into a range for days, but it was a winning trade. Equally, the pound, I was looking for a pullback to 150. Missed it by about 10 pips, my entry. I was then looking for a short at 153.30. We didn't get either of those. Euro yen, I was looking for a short at 130.100, and this did initially win. And then I said, if price breaks out of this range, and this was the upper, this was the lower range, then wait for a daily candle to close and wait for an M2 pullback, which is what we got to the pip to this monthly 200 EMA. And these EMAs are highly significant because of the fact traders all over the world are watching them. Aussie dollar yen, explained price was down here. You could look for on the 4-hour charts for clues, but I preferred the Aussie dollar. And I was also looking for potential short at 9300, we didn't quite get. Swiss acid was horrible, didn't fancy it at all. I'm suggesting either potential short at 9600 if you got a big move up and watch around 94, but I didn't touch this, it was horrible for me. Aussie dollar, I said on the Aussie dollar, look for clues, and this is clues again. This was the close on Friday, and then we move into the Monday morning. You're looking for indecision candlesticks. And I've shown you this the last 2 or 3 weeks as this has happened. Then we got to pull back to the line, and away it went again. And once again, I went into great detail last week explaining about I preferred a move back up rather than a break below 90 at the moment. Dollar yen, I was looking at this area for previous support, missed my entry by about 10 pips. And off it went. And the USD CAD, I was looking for a pullback on the CAD, and I didn't get the entry down here, the ideal entry that I wanted, and then longed at 10400, close of a daily candle, thinking we're on our way, and now it promptly turned back down and it lost. And you just accept it. Nothing is guaranteed in Forex. You make a plan, you trade the plan, and you will have losing trades. It's all part of the game. Now, I was trading last week with a couple of students, and we were looking at the euro pound. One of my students was saying he couldn't see any setups. Now, I had explained in great detail last Sunday's write-up and the video that we have in place here a major trend line on a monthly chart that goes back to 2008. And price, each time it's been up and touched this trend line, it has moved away. So what did I say? I said last week I was looking for a short at 8700. We got this later in the week after news. Now I placed a forward order for this because this is such a major line in the sand going back almost 5 years, and at horizontal support and resistance, this for me was a no-brainer. And okay, you say, well, how do you make the decision? Well, partly it's experience, but the other thing, go down to a 4-hour chart, okay? 4-hour chart, there's all the news issues here. Go down to a 1-hour chart. Here, you had 24 hours here to see that you had indecision candles all the way along here. Now, yes, this was a bit of a punt, a gamble, but when you're looking at the potential gain of 100 pips back down to 8600 for a very small stop, then to me that was worth the risk because of the fact this has been in place for 5 years. So, irrespective of news, yes, the news caused the spike up, but that's what stopped it. Now, on the 4-hour chart, as I say, I was explaining to some students, I said, look, you can trade just from one pair. You don't need to be trading through 20 different pairs unless you're using a system like the STT when you're looking for a specific setup. So what we were doing here, we went down and looked at the euro pound. And I was explaining that euro pound tends to stop at 8400, 8500, 8600, 8700. These are the whole numbers, and that is what it has done in recent weeks. We were bouncing off 8500. We then broke and cleared above it. So then we're bouncing between 86 and 85. Next port of call, we bounce between 87 and 86. It's the way this pair works. Now, what I placed on here we then had the start of a channel, and trend lines and channels. There are videos in the education section about this, and basically each time price has come down and touched this area here, price has moved away. The size of the channel is roughly 100 pips, and therefore you start to look along this line. Now here there was a news announcement here, and I say I was sat with one of my one-to-one students, and we were looking at this, and the news started to move. But this was a good area to take a trade. We waited 3 or 4 minutes for the news to come out. It was dollar news. I can't remember now what it was. Now you would think that dollar news would affect the euro and the pound equally. Should do, but it doesn't always. But anyway, this was a medium amount of noise, and this was the area we were looking at because of the fact it's happened so many times before, and this was previous support and resistance here, and it was 50% fib of this recent move. Just below this you had the 55 EMA, so there was a stack of things going on here. You then start to look in terms of, well, where do you place your stop? Well, you need to place your stop 15-20 pips below the 61.8 fib. You have a potential risk reward ratio then of 1 to 3 if we only got to 87, and bear in mind we'd already decided 8700 was the area for potential short, and it may have kept going all the way for 100. So you have a 1 to 3 risk reward ratio. Yes, there was news coming out, but these overrided it. And once again, I showed you 8700, major line in the sand, and unless the news had been huge and really been unlucky with it, the probability was it was more likely to fall than it was to go up. Where did it stop again? Euro pound, 8600. So get used to a pair. I've told you so many times about this. Get used to the nuances, get used to the characteristics of a pair, and start to learn to go down to smaller time frames and have a look for clues like these clues, and like I showed you earlier on the Aussie dollar, look for channels and trend lines, use your fibs, keep it simple. On to this week's analysis. As we get towards the end of July, we may well be coming up to the summer ranges. We won't know until it happens, but where I'm going to start keeping my eye out now for more sideways movement. This is the Euro USD on a monthly. We are still within this triangle. I showed you how the other week we had still bounced off here and we'd failed to break it. Doesn't really tell me a great deal on here. Areas to watch are obviously these EMAs around 3300. And the big area at the top is around 13400, but not really a market at the moment for me to place too many forward orders. The other thing about this 13300, which I was looking at last week, 133.30, this upper Bollinger has now opened. This is an area of interest, and the way I will play this, I will go down to a 4-hour chart and I will be looking for candlestick clues as to a move back down, or a break above, and you would look for a break and close. And the best thing to do here would be a break and close above the 61.8, then a pullback with a view to a long. I would tend to do this on a daily chart because I said to you last week, I think Bernanke and Co are manipulating this, and they may decide to send it back down again. So it is all a little bit tricky at the moment. This is the same pair on a 4-hour chart. And this is what I was saying about we could be on for the start of summer ranges. And range trading is not that difficult. The difficulty is knowing when we've moved from a trend to a range. But basically the principle of range trading, I will cover it later next week, but you're looking for areas at the top to short and areas at the bottom to long, which is all very easy. What's nasty is when you get these spikes, because it's then difficult. I mean, realistically then I suppose we have to start going up here, then you miss potential trades, but I will cover it in more detail. If we get a pullback to 130, I would be interested to long down there anyway. In the meantime, I will be looking for the signs that we are going into these summer markets. This is the British pound on a weekly chart, and notice how price stopped almost to the pip at a line I've had in place for weeks, and this was after a move. We're now looking as though we may be on for a 5-8 cross. We have MACD divergence on a weekly as well. Price had previously bounced off that double bottom. So it does look a little bullish, a bit like the euro at the moment. Again, we're coming up to an area of interest, but if that then was to break, I would be looking for longs, and if it bounces back for shorts. What I'm preferring to do at the moment is just go back to these simple charts and look for channels. And as I've shown you on the euro pound recently, we have now a similar pattern on the British pound dollar. And how do you play it? Well, the way that you are looking for bounces off this trend line. Now at the moment, price has stopped to the pip at the daily 55 EMA and it has stopped there. So the more conservative method with this one is wait for price to close clearly above here, then look for a pullback with a view to a move up. And you are looking for multiple reasons again. So for example, you would be fibbing. At the moment, you would be fibbing this area here. Fib's not giving you too much in the way of clues. 5200 is a whole number and 55 is rolling up after it. So look for potential trades intraday on channels and trend lines as I've shown you before. And going back to this daily scenario, if it pulls back to 150, yes, I would look to long there. Previously I was looking at 153.30 for a short, but I've just shown you it is starting to look a little bit bullish at the moment, and it could be that sentiment's changing. So this is a key area. Basically, the conservative way to deal with this is wait for daily candle closes. If a candle closes through, you look for a pullback. Be mindful of the fact it may only go this far, but it's still 120 odd pips. You have this 200 EMA, and at the moment this Bollinger Band pointing steeply down. So it's all getting a little bit messy from daily charts, and therefore, as I've just pointed out to you, going down to 4 hour may be the solution at the moment. Euro-pound on the monthly, shown you earlier how important this intersection of this trend line and 8700 has been. If you were trading this from a longer time frame, for example 8700, if it breaks and closes above, then I would wait for that to happen on at least a daily candle. Then you were thinking in terms of a move above, pull back with a view to a long. However, at the moment, I showed you earlier, this pair tends to respect the whole numbers, and therefore we had this ranging patterns going on around 85, 86. Now we've had 86 back down, 87 rather, back down to 86. So it could be that we're just on for moves here. It also could be that this is the start of a down channel. I've shown you how we had an up channel here. If this continues down, then you put your lines in place. So you'll be looking somewhere around here, and you then start to look for pullbacks to the line. The better place for this would be if it breaks and closes below 8600, then you start looking for a pullback to this area. And this then is a combination of general trading that we do, a breakout and a pullback, but then confirmation here on this 4 hour chart. The 55 is rolling over, and therefore you would be looking at the minute at a 20-30 pip stop. But as this moves over and comes back down here, your stop will get smaller, and you are looking at a potential gain of 50-60 pips for the channel, and it could be all the way back down again to 8500. So that's the way to play intraday. Dollar Swissy, messy. Don't really like this at the moment, but if you're going to trade this off a longer time frame, I will be interested to short at 9600. The other option is a break and close below this weekly 55 EMA. Once again, I would only do this on a daily. Look what happened last week. Last week, this candle was starting to move down, and on a 4 hour, you can see how price came down. It was sitting on these 55 EMA. So as it was last week, the 4 hour, you wouldn't have got faked into a trade. But by trading from a daily chart, it tends to avoid fake outs. Not guaranteed, but a close of a daily candle below this area, then a pullback for a short. Once again, the move could be limited, but 170 pips, so it's not bad. Another thing to note on here, one of the members emailed me the other day and said, is this head and shoulders pattern? And yes, I think you're right, Frank. This is the head, this is the right shoulder, this is the left shoulder. Let's say this is the neckline. There is a video in the education area about these patterns, but what you do is you measure from the head to the neck, and that's 470 pips, that middle figure there. Ignore the number 1, that's a 5-digit platform. So the theory goes, if price breaks and closes below this neckline, then look for a pullback, and the size of this gap, this 450 pips, should be reflected in a move down. Aussie dollar. Now, the Aussie dollar, we were in a channel, and this was on a daily chart, and once again, had you taken trades from the top of the channel, this was a 400 and odd pip channel that was going on here. Last week we had a pullback and a spike, and it all got a bit messy. I was favouring a move back up after all these moves. Now, the problem is, of course, that this trend line now has moved. You can start moving over here, but it all starts to get a little bit messy. I'm not sure with the Aussie dollar at the minute. If it comes back down to 90, I will take a counter trend long, In terms of shorts at the minute, I prefer, just going back to my normal method, I would be interested to short at 9,400. It is major previous support and resistance, and if you fib the recent move, spookily it's 61.8 fib as well. So multiple reasons. You also have this daily 55 coming up behind it. So I will be interested to short at 9,400 and to long at 90, and I will be watching 90.40 on a 4-hour chart. And again, you could do it off the daily as of here, but off the 4-hour chart, remember, you go looking for clues, and looking for clues is looking for candlestick formations and then try to find as many other reasons to support the idea. But 90.40 rather, has been important in the past for bounce trades back up. I would not short on a break of this because probability says it will probably only get as far as 90. Final option, of course, if 90 does break, then we start to think in terms of pullbacks and shorts, but I would leave that till later in the week. Dollar yen. Now be very careful with anything yen related this week. There was G20 meetings at the weekend, and the Japanese finance minister has said that they're going to carry on heavily with their quantitative easing. It could well weaken the yen, which is what they are wanting, and therefore we could see gaps on the yens at the market open. The ideal scenario with this will be a pullback, and a pullback to 100 would see me interested for a potential long. This could go many hundreds, if not thousands of pips. I've shown you previously, I have traded the dollar yen back in the days when it was up at 120, 130 area. So there's a lot of potential room to grow here. And because of this quantitative easing and the aggressive way that the Bank of Japan are dealing with it, we need to really try to catch the move. If it comes down back again to here, I would be all over this, and I would double my usual stake, because we've multiple reasons. We've got the EMAs, it's major support and resistance, and it's a 50% fib. So that would be ideal, but I am interested to long at 100. Euro yen. Price broke and closed clearly above 130, 100, which has been major previous support and resistance. I'm more interested in a pullback to the monthly 200 because of the fact that that was just above this area. So it did it already on Friday. If you missed this entry, then I would definitely be looking to long around 131. I would go 120, 130, 130 for me. So you look for a break that we've got, then a pullback with a view to a move up. And if you look at this on a weekly chart, Bollinger Band's open, there's nothing in the way, and there is space to the recent high here of 150 pips. So if we get that pullback, this could be a 250 pip move up. Aussie dollar yen, I'm more wary with this. The Aussie dollar, as I've just shown you, has had a big fall. Then we had a bit of a mini bounce pullback. It's all a bit vague for me at the moment. This was an interesting area to short in recent weeks at 9,300. At the moment, I'm not so sure. And you know by now, if I'm not sure, you just walk away and leave it. Go find another pair or go fishing. Do anything but go chasing price. Finally, the CAD. The CAD last month broke this all-important 55 EMA. First time since 2009. And prior to that, this went back all the way to 2002. That this 55 EMA has not been broken. That still to me is a major area. I took a loss on this last week. Still, I'm only interested to long. However, it does look a little bit bearish at the minute. All the EMAs are rolling over. You've got MACD divergence here as well. The Bollinger Band is open, so we could be on for a move down. It's a case of trying to catch an entry. Now, the ideal entry here for me will be down here, because this is the weekly 200 with an intersection of a daily trend line, and you've got the 78.6 fib just below it. So I'm most interested to long here 10270. Bear in mind, as the week progresses, the entry would need to be adjusted because the price will move up this line. Also, you may find the 200 moving up depending on what pattern we've got here. So that would be the best place, but I will be looking tomorrow at the market open here for, well, two things. One, a bounce trade. If we get a gap, and if price gaps down to here, 20-30 pips away, I will be interested to long here. And the other option is go down to 4-hour charts again, look for candlesticks and indecision patterns with a view to a potential move back up here. This is very similar to the dollar yen in that there is the potential here. Look at this. And I say, I can remember with this pair being well over 130, we were trading it years ago. There's a lot of fresh air here, and there's thousands of pips worth of movement up to the recent highs back 2008, 2009, but there's a load of space here. It's simply a matter of catching an entry. Final option, if we start getting back down here, I'll have another go, and even if I lose 2 or 3 on the bounce on this pair, it won't bother me, because the potential is we could be on for a major move up. The only thing that could kill it is if we go into sideways ranges, and as I explained at the beginning of today's post, what we need to do basically is just watch and wait, see what happens. The market will give you the clues, and if we start to go into these sideways ranges, I will go into more detail on explaining how to trade them. Okay, have a good week. Catch you later.